Good afternoon. This is Matt Leschber with 1836 Property Management. As always, at the end of the quarter, we send out a survey to our investors as well as our residents to get feedback. There's a lot of people who love us, a lot of people that hate us, and most people I think are just trying to get on with their day, which I can completely understand. That's what you hire us to do, is to manage those properties so that you can move on and do what you do best. But either way, we like to be transparent. We like to demonstrate that we actually review all the responses, which we do internally at our meetings, and including sending those over to the teams to make sure they respond to all these and reach out to clients. So this video is about the Q3 2023 investor satisfaction surveys. And we're just going to go over a few, although we have a list of those, to at least share with you guys some things that we found. One of the first ones, which was actually one of the first responses, was y'all, which I kind of love that, way overcharged for repairs. $2,500 to replace a hot water heater that's in the garage. A $500 hot water heater, it takes a plumber an hour, maybe two to replace. That's $1,000 an hour in labor. No plumber charges that. $900 to put in some ridge shingles and shingles back on, and so on and so forth. Unfortunately, welcome to Austin. I can find a guy who is a guy willing to do this, but that's not who we can use. We have to use licensed plumbers. Those plumbers have to have trucks. Those trucks have to be stored. Their equipment has to be stored, and they have to get sometimes city permission to do these things and then bring the property up to code. So whether it's in the attic, the garage, whether it's wherever you want it to be, that property has to meet code. That hot water heater has to get permits pulled sometimes, and here we go. So you can go online, you can find hot water heaters for $500 or $600 after taxes, $600-700. But maybe that isn't one that fits your house. Maybe they had to modify the closet because hot water heaters changed in size over the last few years due to government regulations. Maybe they had to change some pipes because the flex hoses are no longer legal. You have to have hard piping, so on and so forth. Oh, and city permits don't forget that. So it does take a little bit more time than that. Last month, for example, I pulled this up just so I could at least deliver it to you guys. We did 121 plumbing repairs last month. So we've got a pretty good scope of work on what we're doing to know what the finger of the market is when it comes to pricing. So if you'd like to dig into it further, feel free to call around. I can tell you one company we won't use, but I won't publish it here. And the rest of these guys are all competitive. It is Austin. We have to use quality vendors. We can't use a guy who's not a plumber. So you're going to get quality work from us. Next one, another one of the negative ones, we're going to start off with those. Step up your personalized service, especially since your increased rates while rental rates are down. So keep in mind, over the last few years, inflation has taken root. I don't know if you have tried to hire anybody in your company, but you can't find good people and you can't seem to keep them happy because they just go somewhere else where the money's greater and so on and so forth. Everything's up. So our rates are connected to the economy and inflation, things like that. Rental rates are down, but the rental market is not necessarily connected to that. It went way up because it was lack of supply. Now we've got oversupply and it's way down, and that's how it goes. Over the last 17 years, this is my third real estate cycle, and I've never seen anybody drop pricing because the rental rates are up or down. We also don't increase them just because they're going up, because nobody said in the last few years, we're going to pay you a lot more money because I'm doing so well. No, they don't shop that way, and that's not how it goes. So unfortunately, you'll ride the market just as I do with my family's investments. Almost all of us in my family have investments. We've got employees that have investments. That's the way it goes for all of us. One of the other ones is I'm scared to look at the REI monitor, as there's no way I'll be in a black during a single month of making the switch to 1836. Well, while I would love to look into it for you, you didn't put your name, so that's going to be a little hard to help you. We have to be able to connect as humans and come together to move forward together. And if you'd like to reach out to your team after this, you're welcome to do so, but we need to help you. We need to connect with you to be able to help you. So you haven't been in the black in a single month. Well, congratulations if you're not in the black. If you're at retirement age, that's a problem, right? Because you're living off that money. I doubt that's the case. But if you're early in your investing career and you're just in the red, that is great, because now you've got a tax deduction and you're maximizing your leverage. I don't want to make money from my real estate investments, and I'm 50 at this point. I want to keep that money on the table and going. So if I'm just negative cash flow, but I'm not having to touch these properties, ooh, what a great investment. I'm looking at the return on equity. I'm not looking at the cash flow monthly until I hit retirement age. Otherwise, I'm just going to give it up in taxes, which nobody wants. So we've got a couple of positive reviews. Thank you for all that you do. Thank you for all your hard work. Another comment, which I'll round it out with. Just to give you the other side of the perspective, not at the moment. You can't do anything different. As a multi-property owner, 1836 PM has raised the bar for property management quality and standards. So far, everything has been outstanding and relieving. Yep. We've got people that love us, people that hate us. I got a feeling it's all connected to how much money you're spending as an investor. But either way, connect with us, talk to us, meet with your property manager, escalate it if you've got a problem. We can sit with you, look at the results, look at what's going on, and plot a course for you to make sure that you're going to end up where you want to be in the future. And honestly, if the property's not right or something's going on, we need to discuss that as well. So please reach out, connect. Until the end of next quarter, see you soon.